Let's move over here now and talk to Doug Flynn, certified financial planner and the co-founder of Flynn Zito Capital Management. Before we get on to the other business news of the day, anything on this? Is this, is there causation, you think? Red wave, corporate America? What do you make of it?
I don't know if it's directly related to that, but I think the themes behind it are, if you look at it, the top three reasons for the rankings had to do with how well a job they did at keeping inflation down. That was number one. The ethical behavior you mentioned, and then the focus on cultural issues. I think that Republicans were probably already there, and I think some of the Democrats and independents have gotten tired of a lot of that, and so they've kind of moved a little bit. So some of that is concerning to those companies that have decided to make that a forefront of what they're doing and get away from just delivering good products at a reasonable price, which is ultimately what people want. They don't really want to mix all that politics in there.
There was a lot more mixing post-2020 pandemic time, I think, than there is now, and you've seen the turnaround from a lot of companies on that. Now, I mentioned business news of the day. Let's talk about home prices for a moment. Home sales, I should say, falling again. In April, but this time the drop was unexpected. What's going on in housing? Doug?
Yes.
Sorry. What are you seeing in housing? I thought we lost you there. The big freeze.
Oh, no worries. No, I thought we were doing something there. So yeah, really what happens here is it comes down to just the affordability is just not good. It's really low, and interest rates are still too high. And I think it's almost like, in a way, what happens with inflation, where in a deflationary environment, if things are going to get cheaper, if prices are possibly going to get cheaper and interest rates are going to go down, even though there's a lot more houses for sale right now, I'm just maybe going to wait. And so a lot of people waited, and I think that's what's happening. And even though there is a lot more inventory, and that's a good sign, we need even more. I think some people are just are waiting it out. And so not as many people bought houses as they expected, and we do need the interest rates to come down a little bit for that.
Yeah, we thought this change would happen sooner, right? You and I have talked about this, but now when rates do eventually come down, what happens in the housing market, do you think, later this year?
And that's really what people are banking on. They just want to know that it's happening. And right now, the Fed is saying, well, eventually it's going to happen. We don't know when. And even today, some of the information came out and saying, well, we might not even be adverse to raising again. So people are just like, you know what, I'm just going to hang out a little bit and wait. And actually, the other thing about this is, in many places, near the majority of them, it's actually cheaper to rent than it is to buy. So why am I in such a great rush to buy if it's going to actually, cost me more money, and where I am is okay, even though everything is more expensive? It's still more expensive to buy, so I'll wait a little bit longer.
That's a very good point. Timing is everything, but hard to time the real estate market, or any market for that point. Now, in 3+ minutes, or 3.5 minutes, the market will close for today. And then after the bell, we'll get earnings from Nvidia, that high-flying chip maker we've talked so much about. The stock was such a winner last year. It's actually 1 year to the day nearly since they came out with that forecast on AI chips that kind of shocked people at the time. But you look back on it, that started things. It gives us a chance not only to talk about Nvidia, but AI more broadly. We're looking through this, so you can put it up on the screen, at all the companies, not just tech companies, that are now talking about artificial intelligence on their earnings calls in one way, shape, or form. Energy companies, financial companies, real estate companies. There's been a big increase across the board. So I'll go out on a limb here and say this AI thing's not just a fad, huh?
Definitely not. And you are starting to see a transition to the downstream effects of it. So, for example, we've talked about the data centers that are going to be coming from, needing all of these chips. They're going to have to power them. And then if you think about that, well, what powers the data centers? Well, you're talking about energy companies and utilities. And so actually, interestingly, it's already starting to happen a little bit. If you look at some of the top sectors in the market so far year to date, it is energy and utilities, boring old utilities. Well, they're going to have to power these data centers and AI. So everyone's waiting to see just how much demand there is from Nvidia, because if it is an outsized demand again, that is saying we're going to need more power, we're going to need more energy, and those companies are ones that you want to look at. It's not just a tech, it's not just an Nvidia story anymore, no question.
And the question when you have something like this and it starts to get outside of where it started, right? Is it a bubble that's forming? AI, everybody's excited about what the future could be and what the technology can do, but when you do see some of these industries involved that aren't as directly related, you just didn't explain to us how they could be related, but do you worry that we're ahead of ourselves here a little bit in terms of how the stocks are getting bid up based on the future of something like AI?
I mean, eventually you do get a bubble. No one wants to be the last person holding the bag.
Right.
But I think you know maybe some of that has been pulled ahead in the tech area. If they continue to execute, then it hasn't happened yet. But eventually, that expectation is going to be more than what is actually going to occur. But you know, maybe it happens in tech first. You've got a long way to go for it to kind of go through all the other areas that haven't even really started experiencing the positive boom from it. So eventually, you do get there, but I don't think we're anywhere near there yet. There's a lot of benefits that we've yet to even figure out they're going to be. And that's what the market tries to do, and that's what investors try to do is how do I capitalize on it, not just in tech stocks all the time.
All right, we'll see here in a few minutes. Do you think Nvidia, do you have any expectation or excitement about Nvidia specifically tonight, or?
So we're really looking at whether or not it's going to, they've been perennially outperforming what they said they were going to do by the tune of about 20 to 25%. Yes. So now they've set that as the bar. If they come in at less than 20%, it's probably going to be a little bit of a downer, and you could see a negative there. Even though the numbers might be great and higher than they've ever been, they're just the expectations are now those outsized expectations.
Yes.
So I think eventually that has to come down a little bit. But if it's higher than that, here we go again.
Very much like your business reports, Doug. You know, you set the bar too high, and then we expect too much of you every time, right? So thanks for coming on.
Got to lower them a little bit.
Yeah, right. Keep them wanting more. Let's look at the